Hi everybody, I'm Terry Ryder, founder of Hotspotting, and welcome to today's webinar, set against a background of what we like to term as interesting times. Our title for today's event is dubbed rather dramatically, Building Shock, How to Navigate the Chaos for Sustainable Growth. And yes, amid all the disruption that's impacting real estate markets and the home building industry, today we will present the proposition that opportunities still exist to build new homes profitably. To tell us more about that, there are a few people better qualified than Danny Buxton of 000 Property. Danny, welcome.
Thank you, Terry, and looking forward to today's webinar. I think there's lots to talk about and absolutely very interesting times.
Yeah. Now, the expression, may you live in interesting times, is considered in some cultures to be a curse, but others say it's a blessing. And I tend to think when everyone else is panicking, it's perhaps a good time for people with cool heads to take strategic action. So that's one of the themes we might develop as we work through your presentation today.
I actually, as I was preparing for this webinar, was thinking back on one we had a couple of years ago when COVID first hit and all the doom and gloom that we were seeing and hearing about properties crashing and 30-40% crashes across the market, and where we saw it as a great opportunity for our clients and those that have had property during that time frame have seen phenomenal growth in that period. But
I think it's actually quite a good analogy because 2 years ago a lot of people were saying no, we're not going to buy, we're going to wait because prices will fall, because that's what media was saying, and those that made the decision to wait would severely regretted it, whereas those who took action would be very happy that they did, because most people who bought a couple of years ago will have had great growth. And I think we're in a similar scenario now where some people are thinking that maybe they should hit the pause button, but I always think the best opportunities are seized by people who zig when others are zagging.
Yeah, it's very interesting too. I reflected too on some people we're talking to who are ringing up asking for some advice on different things, and a few people who had actually decided to sell their property right at the very beginning of 2020 because of this doom and gloom that they were reading and taking advice from commentators in the media. And met with one of them just recently and just really struggling now to get back into the market, just even for their own home.
Yeah, we've had actually many milestones along the way, going right back to the GFC 2008, and at that time, and also when the Sydney-Melbourne boom came to an end around 2018, then again when COVID started early 2020, and now with interest rates rising, that all points in time when economists, media generally, were talking about a collapse in property values, and none of it's happened. And I don't think it's going to happen this time either.
That's right. So, look, I 100% agree. I think there's people still don't have to be really strategic about where they buy, though, and still take a long-term view in that process. But we're seeing examples for all of our clients where through smart investment, by building the right team, by following the research that obviously we get from yourself, Terry, as well, and being strategic in the way that they do it, that we're getting uplift still, even in the market that is crashing apparently across all of Australia. And I still find it very interesting that so many people talk about the Australian property market as if it's one market, and it's far from that.
Always a mistake. And right now, we're certainly seeing considerable segmentation between markets that are rising a lot, some rising a little, some stagnating and some falling. Today, Danny's going to do a presentation, and we're going to talk through some of the issues around building real estate. And we hope to have plenty of time at the end for your questions. So please put your questions into either the chat box or the Q&A panel you should see in front of you. And we'll try to answer as many of your questions as we can before the end of the hour. And also stay to the end, because there is a special offer that Danny has for people who take action. So over to you, Danny, to walk us through some of the key points.
Well, thank you very much. I'll just share my screen now, and go to our webinar there. So hopefully you can all see that. So obviously, as we're talking about today, the building stock, how to navigate the chaos for sustainable growth. And thanks again, Terry, and for all of our listeners and those who are tuning in or watching this replay. Today we just want to make it as conversational as we can, but obviously just want to cover off on some things fairly quickly, which we'll obviously talk about. Obviously, today's presentation, this is just talking about this is just an overview summary. It shouldn't be considered a comprehensive statement or matters are relied upon as such. General information only. Please always, before you do anything, talk to your accountant, talk to the specialists around you, your professionals, because your situation is going to be different from everyone else's, and it really isn't. There's no there's not one size fits all approach. So just be very reticent of that with any sort of investment that you do. Obviously, there's details if you ever need to get in touch with us. Obviously, you can contact Terry, and happy to share our slides with you as well for those who are interested in a copy of the slides. We can send that through to you for your own reading. So a couple of things we want to talk about today, obviously the media reports that we're seeing, and just really want to just touch on that because there's a lot of information that we've been bombarded with in the media. One of the big topical issues at the moment, and certainly something that we're seeing across the board, is the cost of building, the construction costs increasing. Is it still worth building? Is it worth not doing anything at the moment? Will build costs come down? How to make profit through the build process. And we've got a couple of case studies of actual clients that we're dealing with right now with properties that we've just sourced just in the last few months and where they sit. I want to touch on social housing, which is very topical, certainly here in Queensland. We're seeing a lot of stuff about that with a massive demand for social housing and the requirement for social housing. And what is that? And is that an option that you can consider? And it's something that we're working with a number of our clients with at the moment. And is it really doom and gloom? So in other words, where are the strategic growth markets? Where can we look to identify areas that we can see continued growth, both in the short term, but also the long term as well? So I guess, Terry, there's a lot of stuff in the paper at the moment and on the news about housing market crash and debt stress and, falls of 20, 30, 40% still, again, as we discussed at the very beginning, reminiscent of about 2.5 years to go. And I'm reading some of these same headlines too throughout the world, but also particularly what we saw just 2 years ago. And again, stuff that comes up on a regular basis because the media obviously likes to, it's all about clickbait and it's always either doom, gloom or boom. So just interested in your thoughts, obviously being a media commentator and yourself and a journalist, and your thoughts and your comments.
Yeah, well, I've been researching and writing about residential property across Australia for 4 decades, and I don't think I've ever seen a time when the media coverage of this industry has been as bad as it is. And I note that other credible sources of information about the housing market have expressed similar views recently, that the Nicola McDougall, the president of PIPA, Property Investment Professionals of Australia, was one. Dr. Andrew Wilson, one of the most experienced real estate researchers and analysts in the country, also commented similarly recently that in their time they've never seen such extreme and unreasonable coverage of what's happening in property or what's likely to happen. It just seems like journalists are competing to have the most stridently negative headline about property prices. It's very similar to what occurred at the beginning of COVID a couple of years ago. They were wrong then. I think they'll be wrong again. They're certainly misrepresenting the situation that truly exists at the moment. And one of the problems, Danny, is that so much of our media comes out of Sydney and to a lesser extent Melbourne, and because those markets are perhaps the ones most affected by some evidence of downturn at the moment, they tend to extrapolate what's happening around them to the whole of Australia and talk about prices falling across Australia, which certainly is not the case, as we will discuss as we work through your presentation today.
Yeah, look, certainly, I mean, consumer confidence has taken a bit of a hit. Obviously, there's a lot of fear regarding inflation and cost of living pressures. Borrowing capacities have changed. I mean, obviously, interest rates is obviously a big thing, and everyone's concerned with our interest rates, because they're getting so high. And look, to be honest with you, if someone's concerned about an interest rate of 5%, or even, if interest rates end up at 5 or 6%, historically that's still very low. And if you can't afford a property, you're worried about interest rates being at 5% or 6%, my advice is don't buy a property. It's if that's your concern, because it's we've come off record low interest rates. I mean, in fact, we're in emergency rates, and now we've come back to just before pre-COVID levels. And yes, we're going to obviously see interest rates continue to rise over the next little while. But I'm also starting to see some reports that some commentators and some financial experts are even saying that it may even go up a bit, and then it'll come back down again as inflation comes back into ordinary levels, as we just go through some of the issues that are facing the world at the moment. But I think the big thing here is to understand that there is no, I wish we talked about one market, no one property market. For mine, there's a real shortage of good properties for sale, and literally no properties to rent. We're seeing record vacancy rates, particularly in the markets that we're looking at. International immigration is increasing. There's new construction has slowed significantly, and the pipeline, but our economy is still growing. Unemployment is at historic lows. The wages are now starting to grow, that we're seeing. Household balance sheets, I think it's really important too, that household balance sheets are very strong, with $250 to $260 billion in aggregate savings nationally. Much of that is in offset accounts. Many borrowers are actually way ahead of their mortgage payments. Matt Common, of the Chief Executive of Commonwealth Bank, I said 3/4 of the bank's loans are approximately 2 years ahead of repayments. So we have a very strong, and we do have a very strong banking system. So I think, we need to take all of these things into account when we're, hearing and seeing some of this stuff that's coming up. Oops, I've just jumped ahead a little bit there. So, which, I just think that, for us, I think there's great opportunities that exist there, and obviously, when there is fear, therein lies the opportunity for clients to make some very smart strategic decisions moving forward. Obviously, we're here to talk about too we are seeing a lot of stuff in the media about the cost of building and building pressures. And look, it is a real issue in the building industry. Almost every category of building materials has become more expensive, and I'll give you a little picture here, which I found, which is fairly accurate with pricing. And we've seen a significant cost of pricing over the last number of years, particularly since initially started with the Home Building Boost Grant that the government put in play, which was an incentive there to, I guess, stimulate the economy and stimulate the building industry when COVID first hit. But what it has done is it's created additional pressure in the amount of builds that have occurred. And just before this, there was also some significant weather events with some big hailstorms, which then put upward pressure on materials. And then obviously with COVID hitting, supply of those materials and the cost of getting those materials has seen those prices increase quite dramatically. And then when the Home Building Boost Grant occurred, that, if I look for example of Queensland, in Queensland, roughly about 30,000 homes are built a year. That increased another further 30,000 on top of what ordinarily would be built. Plus, there was about 30,000 homes that had suffered across from Rockhampton to that Ipswich, Springfield area, and here on the Sunshine Coast with massive hailstorms. Saw initially roofing costs escalate significantly, where cost of the roof went from about initial roof supply of materials of about 5,000 or 6,000 went up to about 15,000. So it literally tripled in a very short period of time. And then it had a flow-on effect with other materials. So it has certainly increased significantly. And we've probably seen reports where the average cost to build has gone up in some areas over $100,000 for the average home. Where that has created some issues, though, within the building industry is a lot of builders who locked in their prices came under significant pricing pressures. And then obviously with that demand increasing and then getting supply issues and then developments taking longer to develop because everyone had to start their machines again because everyone stopped when COVID hit. Timeframes got blown out, and then a lot of building companies were also trying to aggressively tap into that home building boost grant, and they grew very quickly and took on a lot more builds than they should have, and grew very quickly. And now we're seeing a significant number of builders who are in financial strife. Co-founder of the Association of Professional Builders, Russ Stevens, said he believed that about 50% of building companies in Australia are trading insolvent as we speak. That's a significant amount. And so it's really important that if you are going to build, that you know who your builder is. And it's more important than ever. The worst thing that you can have is have a builder who's partway through building your house goes into administration. And unfortunately, we're seeing that happen. And for us, with the builders that we deal with, our panel of builders has shrunk quite significantly. And we deliberately did that at that time when the Home Building Boost Grant happened, as this was a concern that we saw with the cost of construction going up, and we saw builders taking a lot more than what they were doing. So current challenges, as I've got there, cost escalations, look, land supply, but we're also seeing a lot of registration delays that are occurring, and particularly along the east coast of Australia because of the weather events that we've had, also with flooding, and obviously here in Queensland, we've had, I can't remember it being so wet. And obviously when you've got heavy machinery in developments, that is also creating an issue there to get that heavy machinery on to get that land registered. So start times and build times have blown out. But the big issue too is that supply of materials and obviously trades and trade prices going up. An example is bricks. For example, a bricklayer was going from around about $1.50, $1.80 a brick to around about $4 to $5 a brick to lay. And so that's a significant cost in your house. But the big issues for builders is managing their cash flow. And cash flow is absolutely an integral part of the process. So if you are going to build, you really got to understand and know your builder. So you want to understand their financial status. You've got to build with a financially strong builder who has those cash reserves there without compromise on the quality of your builds and your finish. And, we're seeing some people chasing the cheapest builder, and then they're halfway through the build, and then the builder hits them up with a significant variation because they can't complete that build. So if your builder's going to have that conversation, make sure it's done before you go unconditional, before they start the build price. Here in Queensland, it's illegal to ask for more money because of these cost escalations. They don't have the rise and fall clause in contracts here, so you need to be very careful and get that advice from a trusted source before you agree to anything. Look, current builds, under construction start times, understanding your builder, knowing how many builds are they doing, are they stretching themselves too thin? Are they growing? Have they grown too quick? How long have they been in business for? Understand their footprint, and they're not going beyond their footprint and putting undue pressure. So understand what is included and what is not included in your build price is another big thing. It's something we always talk about with our clients, and especially what we do for our clients, protecting them. And we're very comfortable, very confident with every builder that we deal with, whether it be in South Australia, where we're fairly active, and obviously here in Southeast Queensland.
So Danny, I just want to, a lot of people watching and listening would probably say, well, I wouldn't have a clue how to research a builder and find out about their history and their strength. How do people do that? I mean, do they need to talk to somebody like you for advice, or what's the process?
Look, 100%. Look, we have a very strong relationship with the people that we build with. Always have. I guess we use the term fewer friends, better friendships. And so with the builders that we've been dealing with, we've been building with them for over 15 years, some of them. I sit down with those builders I know and they're able to open their books to me so I can see where they sit financially. It's probably a little bit difficult for a client to go to a major builder and say, hey, can I have a look at your books to see where you sit financially? Or dealing with a salesperson in a display village, because in the day that salesperson, sure, they're doing their job to obviously get the sales for that builder, but they just want to get the sales so they can get the commission. Doing your license checks with the QBCC here in Queensland, for example, and the different appropriate bodies in each of the states. But it's all about, I guess, working through and sitting down with that builder and just in how, well, for me, one of the things is just looking at how quickly they've grown. Are they doing the same amount of builds last year, the year before, the year before? Are we seeing a consistent level of builds, or are they growing at a really quick rate? If a builder's growing at a really quick rate, I have major concern, because it's managing that cash flow and being in that position. So, for example, a number of our builders that we sit down with, I know where they sit with their finances. They show me where they, I get an audited report, whether it be through their accountant or with them, and we can see where that sits. So it's that regular communication with where they are at, and it's a challenge for most people. And organisations like ourselves should have the ability to be able to give assurances to clients in that process.
Okay.
So a lot of benefits with new. Look, new is not the only way to invest in property, but it's an area that we do, and we really do, and it's how I invest. And the reason being is obviously we get increased rental demand and rent as we go into an area where we see significant growth and demand. Tenants prefer to have new properties. I mean, at the moment, I think with vacancy rates so low, I think some tenants are just happy to get anything. But it's also about future-proofing that investment and making sure that you're always going to have consistency in your tenancy. But we tend to achieve much higher rents with the new property, continue to get increasing rent because we're designing a home that's based around the needs of the demographics that are moving into that area. And those demographics are changing. And so when we go into these new areas, we're wanting to make sure that we're designing a house that's right for that area, that's meeting the demands of the people that are moving into that area. Obviously, too, cash flow is a really big thing there. So minimal, no ongoing maintenance with the new property because you've got the new home warranty there, as well as with all your appliances and other bits and pieces. But a big thing, which I know you talk about with one of our other panel members, was about depreciation and the importance of depreciation and giving you increased cash flow through that. A lot of people think negative gearing is buying something to make a loss. It's actually, I would say for us, we're able to achieve cash flow positive properties or properties that are cash flow neutral, and they're able to get that through depreciation. So it offsets some of those holding costs and actually puts you in a better financial position, because managing your cash flow is imperative. But also one of the really big benefits is manufacturing growth through that build process. And I've got a couple of case studies that I want to talk about and show now as we go through this. This is a property that we did and ago. I know you and I have spoken about the peninsula, the Redcliffe Peninsula, just north of Brisbane, as an area with significant growth prospects. And it's an area that we've been looking at and been actively involved with for quite some time. This is a client of ours who's a very happy client, obviously, in a state called Newport, near Scarborough in Queensland. That property was purchased about 8 months ago. 740. He settled on the land 8 months ago for 700, with a total pack of 746,000 for both the land and the build. we managed that build process for him. And his strategy was to build it and then offload that property and sell that property. He put it on the market just over a couple of weeks ago now, and within 7 days of being on the market, had a contract there with a purchase of 990,000. So that was an uplift of 243,000. So if you break that down to a weekly increase, that property went up $7,000 a week, which he's absolutely ecstatic about, and now is looking at his next opportunity. Another one is an area that we've talked about too, which is just North Sunshine Coast in the Gympie region, Gympie Council. This is in Southside. We've had some clients be very successful here. We've just recently had a client has just gone unconditional on his land, the total package house and build, again with our trusted builder at a fixed in price of 625,000 total package price. We have sales evidence in that same estate by the same builder with some of our clients where those properties are sold for over $700,000 in the same street. So even though we haven't started that build process, that property is now at completion. We would see that valued at over $700,000. So there's an immediate growth there for him, for them, sorry. You know, we really like this area because we still see continued growth. We see it as an area that, because of its affordability in the region, with continued infrastructure spend in that area, it's very centrally located and affordable. And in fact, we're finding a couple of our clients were buying these as investment properties, have even actually moving into them because they're just slightly larger lots, and they just found that it just, from a lifestyle perspective, suited them very well. So their strategy changed, but they've gotten the uplift in that process. Another study is in South Australia. South Australia is an area that we've been looking at for a little while now, and we've talked about on a couple of occasions, Terry, in our webinars, and I know you're also a very big advocate of the Gawler region, or that area just North Adelaide. A huge amount of job growth, infrastructure spend, and I mean, vacancy rates there are huge. Sorry, when I say huge, I mean, it's fantastic that it's so low, of less than 0.2%. And in fact, in this particular area, anything that comes up is rented straight away. We actually see really good rental growth still to occur here. This property was purchased in April, and just starting construction now, and already we just can't replicate this property price, and at completion is already worth around about $540,000. So again, immediate uplift there for that client of around about $70,000. But again, it's all about location, and it's about finding that right area where there's really high demand and pent-up demand, where there's those school catchments, access to facilities, public transport, the like, and an area where there's just, again, that significant demand for property, and we don't see that slowing down. Interesting to know, I mean, we do believe that the property market has been very aggressive in the last 18 months, and there's absolutely no doubt. But it hasn't gone into reverse. What it's probably done is it's probably gone from fifth gear back into second gear. And we're still going to see that continual growth. I think we've gone into a probably more normalised market in growth, as opposed to that aggressive fear of missing out where people are just paying silly pricing. The other thing to note too is it's about affordability, and we're going to areas and we're building affordable housing where you do see fluctuations in the market, and again, be interested in your thoughts here on this, Terry, but low-end property doesn't seem to really be impacted by a market that tends to cool, because it doesn't get any cheaper. It is the entry level. It's an entry level home. Obviously, we design our homes to have a few little extras there, those little 1%, and those little 1%, across the board really makes it a lot more appealing for a tenant, but also too from a resale perspective. And again, your thoughts?
Yeah, we recently did our quarterly analysis of pretty much every town and suburb in Australia, looking at patterns with prices and particularly with sales activity. And what really stood out for us as a general theme across the country is that it's the more affordable areas that are holding up the strongest in the new circumstances, where we're seeing sales activity coming off quite a lot and pricing in some cases following that trend. It's really the upper end markets, particularly in the bigger cities. So more affordable areas are still holding up with sales activity by demand and strong pricing levels very well. Certainly that's true in Adelaide, which pretty much every day I'm talking to somebody who's got some connection with the Adelaide market, whether it's as an investor trying to buy there, a buyer's agent trying to buy on behalf of a client, and they're all telling the same story. It's still a very busy market, very competitive, and property selling very quickly for strong prices. So this is one market that certainly doesn't fit that generalised commentary we're getting in media at the moment of prices falling everywhere. Certainly not happening in Adelaide at the moment.
Yeah, and I'd like to talk a little bit more about Adelaide in a bit, because it's an area I think that's worthy of significant consideration for those who are looking to invest. Look, another area that we're seeing a real demand for is in social housing. And what is social housing and what does that mean? And is it really a smart investment? A lot of people tend to think social housing as the old housing commission home, for example, but it's actually not. It's very topical here in Queensland and across Australia with such certainly here in Queensland, the Queensland government has a promise to provide a huge amount of social housing. Yeah, last year they only provided something like 350 odd houses, or properties, and it's a major an area of significant demand. And so for us, we really like it as an opportunity for clients. The social housing projects we partner with don't really. Sorry, before I start, I probably think it's important to understand we've talked about special disability housing in the past. Social housing is different from that in the sense it still fits in that social housing quota, but some of the stuff that we're doing at the moment looks and feels like every other house in the neighbourhood. You would drive past and you'd even walk in that house, walk through that house, but looks and feels like an everyday home that anybody would live in. But its design is unique in the sense that it's just got these little adjustments, little differences that are done to ensure that it's compliant and that meets the requirements for the targeted community housing provider that you're working with. And for us, we've seen great results in this for our clients at the moment. There is, as I said, a massive undersupply. For our clients, it also gives real long-term rental security, as a lot of these social housing providers are wanting to lock in long-term leases, whether it be a 5 by 5 year lease, or even a 10-year lease, or an ongoing 2 by 2 by 2 continual lease. When we work with them, we negotiate rental increases, annual rental increases. So it's really a set and forget model for a lot of our clients. Still renting through our property management arm, and then the community housing provider will rent that property from our client, and then they will they'll receive funding, whether it be funding through the government. Some of it might be NDIS funding. It could be other social housing funding that they've been able to have, and then they will then put their tenants in there. And I've actually got a property which I've had for a number of years, which I actually operate as a social housing, and as does my father-in-law, has 2 of them, and where it's great. I don't have to worry about vacancy. I don't have to worry about maintenance. I don't have to worry about whether my tenant's going to leave. Interesting enough, when my property was first rented by the community housing provider, there was actually no one in the house for about 3 or 4 months. but I was still getting paid weekly rent because they were just working with the right participant to move in. So it could be a case where it might be, for example, in my house, there is 2 adults living in the house with Down syndrome, and they have a care provider that will be with them during the day, and they might live just around the corner. And if there's a need or anything that they need, they have a button they push, and then they're there within a couple of minutes. And for me, I think it's a wonderful way for me to give back to, we call it ethical investing. So we're supporting those in need, but at the same time too, having that long-term secure investment that we're able to provide. But also we're buying into an area where it's still growth focused. And we're seeing that increased growth that exists there from a capital growth. I can still sell my property if I want. I can still sell it, but if I do sell it, obviously the lease goes with that. So it's until that lease expires. So it's a great opportunity.
So what kind of rental yield did, I know we've spoken in the past about specialist housing for people with disabilities, and the rental returns were extremely attractive to investors in that case. Is it a similar situation here?
Yeah, look, no, you probably tend to, for me, I rent mine at market rent or just a little bit above, but the participants, but I get an annual increase of around about 2-3%, which continues to grow. So I'm not concerned. It's more of that set, forget, and not worry about. But the one of the things we really like about this is there's not that blockage that we have with special disability, with the fact that there's a lot more risk with special disability. You do have vacancy initially. And then you're waiting on the NDIA to then a proportion of those funds back through to you via your special disability provider. What I like about this is banks are happy to lend. It's not like it's just a normal investment loan. There's no massive hoops to jump through, whereas a lot of the banks are still struggling to, even today, to still get their head around specialist disability housing, whereas for social housing, in essence, it's just a normal rental home with some small tweaks in there with a long-term rental lease. So it just gives people certainty that they know that it's always going to be rented. And the demand is off the charts. So it's just, again, find the right community housing provider that you're happy to, which we do for our clients here. We have a number of there that we work with that the house and the design is worked with them, which ticks a box for them, and then off we go. So it's certainly an opportunity there for those looking for that long-term security. And I guess too, it also future-proofs that investment as well. You know that it's going to always have someone in there, irrespective of what happens to the market. But everything we've been talking about is choosing the right location, and that location is paramount to anyone's success in where they invest and where now. Again, find it very interesting in the media and reading the media. As you know, I live here on the Sunshine Coast. I live in Minyama, and I read a report the other day that Minyama property prices have dropped by 8.5% in the last month. And I always have a bit of a wry smile when I read that, because it's all based on the data that they're looking at that time, and they're only looking at the short-term month-on-month data. And, you know, in Minyama, there's some very high-end properties which may come off, or there might not be a lot of activity, particularly over winter because they're on the water. Whereas you also have areas that are your typical housing, normal housing on a dry block, a normal block of land, which is, and if we see more houses selling at if there's not a lot of high-end houses selling, obviously then the average house price for that month has dropped. So if you've got a couple of sales of $7, $6, $5, $4, $3, $2 million happening on a regular basis, and then there's not a lot of sales activity in that price range, but there's a lot of sales activity in that $800,000-$900,000 price range, all of a sudden values have dropped. But have they really dropped?
Well, the median prices drop, but it doesn't mean property values, and that's one of the many mistakes that journalists
totally.
make in their reporting of price data is they assume that if the median price drops 5%, that means values have dropped 5%. But really, as you've just illustrated with the example of the suburb where you live, it can purely mean that being fewer high-end sales, but it doesn't quite often doesn't mean at all that values of it's possible to particularly when you're dealing with short-term data, have a situation where the median price has fallen, but values are actually rising. And your average journalist doesn't really understand too much about what they're writing. They'll just repeat what's in the press release from CoreLogic or PropTrack, who are competing with each other to be the one to have the most stridently negative headline about property values at the moment. And it's all just adds up to a great seething mass of misinformation about property markets and prices at the moment.
But I don't discount the fact that, you know, high-end prices will come off. There's no doubt. High-end prices or properties at the high end tend to have some very aggressive growth when we go through a rising market. And when the market does slow down or we don't go back into a more normalised market, it can, and that's where we do tend to see those values drop. But your affordable properties and your properties at that lower end in that area don't have that same impact. And again, it's coming down to research and understanding the data and the information, which is something that you work in, day out.
Yeah, it's very true that the top end property markets tend to be more volatile, and you don't get that level of volatility in the more mainstream markets and the cheaper end, which are a lot more steady. Do you have more slides to show us? We're just mindful of time and wanting to allow time to deal with people's questions.
Yeah, look, that's it until we go towards the end. I think on that point with what you talked about, I'll just stop my share here so people can look at your and my lovely faces a little bit clearer. But high-end property does tend to, if you look at it, if you think of it as a funnel, there's a lot less people that can afford the high-end pricing. So, but in the low end, when you're at that lower end, that's the most affordable. So there's a lot more people there that have the ability to both rent the property and or purchase the property if you decide to exit and whatnot. And that's where you see that growth. And so it's very important to when you're doing your research to look at those areas. And so I'd like to talk a little bit more about areas. And obviously for us, we see Adelaide, as we talked about before, as an area with this huge opportunity there. It's in a different cycle. From mine, I think it's around about 12, 18 months behind the Brisbane market in its cycle. It's completely off cycle from the Sydney and Melbourne markets, which a lot of people have a look at. Brisbane or Southeast Queensland, I think, is a completely different beast into its own, particularly with the amount of infrastructure spend and obviously the lead up to the Olympics. I see, I know some of your commentary recently. Look, I think the next 10 years are going to be very, very positive for the Southeast Queensland market. And I think there's some real opportunities there for people to look. Property is always about long term, and you should always have a long term view in your property. But there's still opportunities there for people to buy smart, get some immediate uplift, but also to ensure that they're going to always have a property that's that's going to be rented and rented well to get a good rental return.
Yeah, well, I certainly agree that Adelaide is certainly a market that people should consider. It offers affordability and it offers growth, great value for money. And I think, it's early in a growth cycle, and I think long term it's going to do very well. Southeast Queensland, Brisbane and Southeast Queensland, but also more broadly regional Queensland, I think is going to be a market that's going to show growth. And it comes down to being location specific. There are some locations, some regional cities that are better than others. That's true anywhere in Australia right now. I think you do have to be a little bit more selective in choosing where you're going to put your money, as opposed to, there are times in the last couple of years where it felt like you could buy anywhere and get growth. To a certain degree, that was right, but long term, maybe not so much. I think people need to be thinking about the underlying qualities of the location they choose. Queensland offers a lot, Adelaide also, and South Australia generally, I think, has plenty of growth left in it. Also Perth and Western Australia. But there's growth markets to be found right across Australia, including the two biggest cities, Sydney and Melbourne, the more affordable areas. There's no doubt that the trend that we're seeing as a generalisation is that the markets that are showing up the strongest are the ones that offer a level of affordability, and from the viewpoint of investors, that have the high yields, because that's one way that investors can compensate for higher interest rates, is the fact that vacancies are so low and rents are rising so very strongly in so many parts of Australia. That's a strong compensation for having to pay more on your mortgage.
Yeah. Okay, and I noticed there's a question there from Nicole, who asked the question, do total package prices include stamp duty? So in the examples I gave, it didn't include their stamp duty costs, but stamp duty is only, when you build, you only pay stamp duty on the land. So for example, if you're in Queensland and you're buying a property and the land, let's say, is $260,000, using that as an example, your stamp duty is going to be around about $9,000. I haven't told the exact number, but around about that sort of price range. If I was buying a property complete for $625,000, as if it was already completed, my stamp duty is going to be up around about that $18,000. And so there's savings there in that build process.
So, to summarise then, the stamp duty levels you pay for a new build are considerably less than what you'd buy for buying an existing property.
100%. 100%.
Yeah. All right. There was a question about, we were talking about the importance of knowing your builder and engaging with a builder that's got a good track record and is solid financially. And there was a question about, well, what are some of the builders you use? Is that something you can talk about, or is that something that people need to follow up and make contact?
Yeah, people need to follow up and make contact with us, because it all depends on where and when and what you're looking at. We have, fortunately, we have a great relationship with our builders. We get preferential treatment with the builders that we use because we have volume through them. So we're a single person going to that builder, they're a one-off client, whereas because we're managing that process, we're able to negotiate to get the best price for our client and manage that process, which takes a lot of pressure off the builder and having to deal with the client direct. Clients still have contact with the builder, but it's us managing that process, which gets us the leverage that we're looking for our clients.
Okay. There was a question there from anonymous attendee. Can they get a copy of this webinar? Yes, everyone who's registered for the webinar will receive in the next 24 hours probably a recording of it, and including people who registered but weren't able to watch it live today. So a lot of people who have registered can't be here at this time live, but we'll get a copy and can watch it at their leisure. Barney's asking a question to find out more about the difference between social housing properties you were talking about and the NDIS properties. You touched on it briefly, but just seeking a little bit more information there, I think.
Yeah, so an SDA house is a house an NDIS SDA house is a house that's specifically built for those who are under the NDIA program, who get funding through the NDIS. For example, someone who might be, a classic example is a wheelchair-bound person or someone who has a significant disability, and their funding allows them to apply for housing, and that process is very complicated and very challenging even for them to apply for with the amount of red tape, because there is significant costs involved. But the house and the cost of building that house is quite significant too, because you're talking with very specialised equipment potentially in that house. And there's a lot of confidentiality around that process. From a social housing perspective, it could be an organisation that is working with people who are associated with domestic violence, and so the organisation would rent the house direct through you, and then they might provide emergency housing for people for a period of time. Although you're still getting the weekly rent, that person is then, that organisation has funding from the government to provide housing for that person while they're dealing with their challenges and their issues. It could be for people with who may have some disabilities, but they don't qualify for the special disability component of the NDIS. And so, but they still need somewhere to live. And that's probably where we're seeing a lot of demand, where there's opportunities that exist there. And there's, again, a massive need for those type of houses. And what we like about it is it's just a normal house, some slight changes, some slight differences, but if someone was to live in it, they wouldn't really notice a lot, much of a difference in it.
So with these social housing properties, the degree of specialist inclusion is much less than is required for an NDIS property, which actually has a lot of speciality, has to tick a lot of boxes to qualify.
Yeah, special disability housing would normally cost more than 2 times the amount of a normal social housing house that we're talking about. So the affordability of SDA housing is becoming more of a factor, and where it's probably become more of a challenge for us, for our clients, is because the cost of land has gone up significantly too over the last few years. All of a sudden, the yield and the returns are still very strong, but with the delays and stuff, there are some challenges that exist there in that process.
Right. So Balaji is asking questions about building costs, and do you see an uptrend in recent months in the construction of steel frame houses? Do they offer better construction costs and long-term value over timber frame houses? Any thoughts on that?
No, I think the reason why a lot of builders went to steel frame because there was a massive timber shortage, because a lot of the timber came out of Russia, and also out of the States and out of the US. And it's funny enough, there's actually there's a huge load of timber coming across the Pacific that actually turned around and went back to the US during COVID. But it's more, steel costs have actually gone up and up and up. It doesn't necessarily mean that it's going to be cheaper. Some builders who have always been building steel have been able to lock in their pricing. But it depends on each and every builder with their relationship with their suppliers and their supply opportunities there. On cost pricing, though, I didn't mention this and I should have. We're starting to see it plateau out. I think in talking to the builders that we're working with, they're seeing that a lot of those increases are starting to come back to normal, in the sense that not seeing a weekly increase every week of costs going up and up. And there literally is, I'll be talking to one of the builders and he'd ring me and say, "Oh, I wouldn't believe it. This has gone up. Concrete's just gone up again. Every week it's gone up. This has gone up. This has gone up. This or steel or whatever it might be." And that's now, we feel that probably the worst of it is over, and it's coming back to, I don't think prices are going to go down in the cost of construction, but I think it's now plateaued out, and I think we have a bit more confidence in where that pricing is going to be at moving forward.
Yeah, just on a slightly different track on the similar theme, Simon is referring to not so much the cost of building, but delays in building, or delays in being able to access to a builder who can build your home. So I'm hearing of build times in Southeast Queensland being quoted as long as 2 years. What are you seeing there?
It's not just in Southeast Queensland, it's across Australia, and that's why you really need to know your builder. And with our builds, absolutely, when probably about 12 months ago, for the builds that we're dealing with, we probably had some of the slowest build times that we've seen for a long time with those builders. But we've started a house and finished a house when there's a house that almost hasn't changed stages, and we've been able to build the house the whole way through that process. But there are builders who have cash flow issues or supply issues, may not start for some time, and they're builders that I'd be very wary of dealing with. So you want a builder that is efficient in their build times and is able to complete that house within the time frame that has been agreed upon.
Okay. Inevitably, we've got a question there about Queensland changes to how they charge land tax, and that's an issue that a lot of people are asking about. The detail is not yet really clear. It's something that the state government of Queensland has flagged to take effect in the middle of next year, potentially. But I'm finding it very hard to get really definitive information about how it will work and what impact it will have. What are you saying, Danny?
What do I think? Look, I personally think it's unconstitutional. That's my personally. I don't think it's they can do it because it is a land tax and it's a state tax. So I wouldn't be surprised if we see this challenged. And I've actually raised it with a local member of parliament here in Queensland, but also too with a very senior property lawyer and their thoughts on it. And it's actually something that they're going to be pursuing as well, just through their association, because they also too find it hard to understand how this is right. Look, it can impact some people. For me, though, I just can tend to look at what is it that I'm trying to achieve. Look, I do pay land tax on my properties just because of the portfolio that I have and the way I structure it. But it's also to having a conversation with your accountant. You know, there are ways in which, for me, obviously the way I structure some of my stuff because of running a business and having a business, I buy through trusts and companies. So that allows me to mitigate lands tax to a certain point. But then obviously as those land values grow, then I start to pay what I call a wealth tax, which I'm not a big fan of when I get my land tax bill. But at the same time too, when I look at the big picture of what I'm achieving and the growth that I'm achieving, and the returns that I'm getting, it doesn't impact me as significantly. But also is another reason why to look at South Australia as another opportunity too, where that doesn't exist. But South Australia has higher stamp duty costs than what we have in Queensland. So you've got to weigh up all those things and talk to those professionals around you and about what's the right strategy for you.
Yeah, I mean, my gut feel is this Queensland land tax thing won't actually come to fruition. I think will be challenged and a lot of validity in the challenges that will come. Something I think they floated to see what sort of pushback they got from it, because the state government of Queensland's a bit short of money in the hiking royalties on resources, and they're looking for all sorts of revenues avenues for revenue. It's
very contradictory. It's very contradictory to what they're trying to do, because they're trying to push for greater investment. We've got a massive undersupply of properties. They're desperately needing more than ever new housing to be built. Yes. And they're desperately needing houses to be built by investors, because we have a massive rental shortage, and it's very short-sighted in its thinking. And it just staggers me that someone would come up with this and go, here's a quick fix. We can do this.
The politicians never think beyond the press conference, Danny. They never think through the consequences. You referred earlier to the grant to encourage people to build more houses, but they didn't ask the question, if we're successful with this policy, will there be enough bricks and will there be enough bricklayers? And as it turns out, actually, no, there weren't. They just didn't think through the consequences. And we've got builders going broke as a consequence of that. So this is another example of politicians' short-term fixes for a problem, but creating even bigger problems in other areas. And it really can't happen, because they really need to be encouraging investors, not discouraging them.
Just going back to Simon's question again about delays. I mean, we've got a number of with some clients who've their land's just registered, and we've already got job starts ready to go. As soon as those plans come out of council, job starts are happening and construction is beginning within a short period of time. So, and look, it's actually for a smart builder, it's in their interest to build the house as quickly and efficiently as possible, because they're mitigating any additional costs that may incur in further growth or surge in pricing. Although we do feel it's coming to an end, that surge in pricing, it's a good builder doesn't make profit until their final payment is received, because of all the other costs. Their margin is off the last payment. So,
okay, thanks, Danny. We're sort of come up to the hour, so it's probably close to when we need to wrap it up. If you could perhaps we haven't managed to answer all the questions, but we've answered most of them. But for people who have further questions or would like to have a conversation with Danny or a member of his team and follow up on some of the opportunities that you've talked about today, how do they make contact, Danny?
Yeah, fantastic. So I'll just come back to here. Look, just before that, I think in everything that you do, and I use this slide in every presentation I do because it's so important. Before you do anything, you've got to start with the end in mind. What is it that you're trying to achieve? What's your goal in investing in property? What is the purpose, and what is your strategy? Once you know and you have that goal in place, you can then work backwards and understanding where you sit financially. And it's good to have a chat with an independent financier. We've got a number that we can recommend. Get that pre-approval in place, get your legal team sorted out, utilise a company like ourselves. That's what we do, 000 Property, and get yourself market ready. Even with our clients, particularly when we're looking for really good opportunities, we still need to move very quickly. So buy smart, but also when you do that, future-proof that investment with where you go, get the research and the data. Refer to Terry's reports. It's such a small investment in subscribing to the Ryder reports, because when you're spending a significant amount of money in a property to be able to access those that funding, that research is so imperative. Build your team as you build your portfolio. So, we have people can contact us obviously, but we also do have a special offer for anyone who's watching this webinar or watches this. If they contact us and they utilise our services and become a client, once we're underway, we'll then organise a premium gold membership for 12 months, which is valued up to $2,000. So you can contact us by just Google us at 000 Property, or contact us through our website or our 1300 897 000, or also just jump on our website there and make touch with us, or they can contact us through Terry and the team at Hotspotting, and we'll be more than happy to help them and answer any questions in the process.
Okay, thank you, Danny, for another very informative presentation. Lots of great information, great ideas, still excellent opportunities for people to invest profitably, building new properties in good locations around Australia. If you'd like to find out more, I urge you to make contact with Danny or a member of his team at 000 Property. The number and the website and the email address is on the screen. So I urge you to follow up, and it doesn't cost anything to have the conversation in the beginning.
In fact, it's important to let people know, look, we don't charge for what we do. We're paid by the builder through a profit share arrangement, just like a broker is paid by the bank. So it doesn't cost anything to use our services, but by all means, if you're interested in having a bit of a chat, more than happy to jump on a Zoom and talk that through with prospective people asking questions or want to know a little bit more.
Okay, great. Thanks, Danny. We'll do it again soon, I hope. And for everybody who's been out there watching and listening, thanks for your participation, your comments and questions. And
thank you.
Bye for now.
Thank you very much.